In this video, I'll be discussing the business model of Robinhood. Robinhood has quickly become one of the most popular brokerage websites for investors, with its enticing zero brokerage fee, its ability to trade with borrowed money, and sleek design, ultimately bringing in a lot of new traders and really closing a gap in the market to make investing easy and accessible, something that it really wasn't before. It's great to see how well the app has influenced new investors and really improved accessibility of the stock market. Jumping into Robinhood's first revenue source, receiving payment for order flow. So with Robinhood, due to its zero brokerage trading fees, it needs to generate income in other ways, whereas traditional brokerage websites will charge a fee for, say, buying or selling shares, and Robinhood doesn't have any of that. So how do they make money without charging for these things? Well, on Robinhood, when you place your trade, it doesn't go directly into the market. Instead, it will go to something called a market maker, essentially a broker for the broker. And the market maker will pay Robinhood to receive something called order flow. And this is just information about the stocks that Robinhood's customers are buying. So this is very valuable to the market makers, which are often banks, insurance companies, or hedge funds. They have complex algorithms that give them a lot of detailed information about what's happening in the market, and they'll use this information to dictate what stocks they buy and sell. So the more info they have for the algorithm, the more accurate their buying and selling decisions are, and ultimately improve the amount of profit that they can make. When the market maker receives information about order flow from Robinhood, they can also complete the second half of the transaction. Because they have that information first, they'll go and acquire the shares that Robinhood's users are after, slightly inflate the price, and then sell it back to Robinhood. This is something called front running, and the inflated price is minimal, virtually negligible, something you wouldn't notice. When it's done in such large volumes, it's a very, very profitable source of income. There's some controversy around this trading method, and it's landed Robinhood in some hot water before. With zero fees, they need another way to make money if they're not charging for it, because zero fees really will draw in a lot of people, and it's part of the reason why the platform is so successful. Another way Robinhood makes money is through its gold subscription. It's a $5 monthly fee, and it gives you access to a few more extras, level 2 NASDAQ data, Morningstar reports, so you can gain a bit more information about the companies you're wanting to look at. Not really too necessary in that regard. You can find a lot of info about the companies you're wanting to look at and do your own research outside of Robinhood. There's plenty of free sites available, but one of the main advantages that it gives you, which is ultimately beneficial for both you and Robinhood, is the ability to trade on margin. You can invest with borrowed money, and anything over $1,000 on margin, so on the borrowed money, will cost you a 2.5% interest every year until that borrowed amount is paid up, which is kind of a cool idea. I mean, it can definitely backfire on users, especially ones that aren't too experienced. It's really something that's also got Robinhood in hot water as well, because it sort of preys on the fact to an extent of a new investor that doesn't really know how the market works, the amount of money they could lose and the implications it could have for them. But in the same regard, that's why Robinhood has been useful as well, because of how easy to use and appealing it is to new investors. So it's sort of a double-edged sword depending on how you want to look at it. I mean, definitely can argue that people should just be responsible with their money, and what they do with it is sort of up to them. But then again, it kind of varies based on your perspective. But make of that what you will. Robinhood also has a partnership with Sutton Bank and offers a debit card with its own individual processing and transaction fees. Nothing out of the ordinary here either, but another source of income. And the last one is Robinhood also receives interest on any cash that's left in users' accounts that hasn't been invested, which is common practice, nothing odd about that. It is definitely useful with the amount of users that it has, and most likely substantial amounts of cash idling in people's accounts. So another great way for them to make a further profit. It has definitely some very, very good revenue streams, with its customers growing exponentially every year. But who knows where the company will go after the whole problem with GameStop and them halting trading, people wanting to sue the business and deactivating their accounts to find a different broker. Only the future will tell what's going to happen. As always, I hope you learned something new. Hope you found the content useful. Let me know, what do you think of Robinhood? Any problems with how they make their money? And have you stuck with Robinhood through GameStop? I'd love to hear your thoughts and opinions. Really enjoy interacting with my viewers. As always, thanks for watching. I'll see you guys in the next video.